All right. So we're going to switch over back and forth with the microphone. Yeah, hi, I'm Peter. I'm a tech guy who ended up working in the regulated industries, and so in the end it was never my plan to end up working in banks and that's such stuff. But I have the impression that there's a lot to do and also a lot to change, and somehow I still find it pretty intriguing to build in that space. So my first company was a software development company that I founded out of university, then joined a company builder that was doing fintech ventures. So that was then my segue into the finance world. We were starting Solaris Bank, so I was a co-founder and CTO at Solaris Bank for the first 3 years. Then got into the blockchain world, simply also with the question if people can become their own bank just by holding a Bitcoin wallet. So why are we continuing building a bank? So that was my, let's say, research thesis back in the days that got me into that very deep rabbit hole I'm still in today. And yeah, so then built up Börse Stuttgart Digital Exchange for 2 years. The last 3 years I was building up Iron and Unstoppable Finance, so a non-custodial wallet and stablecoin infrastructure, sold it to MoonPay, and now for the last almost year I'm helping to build up AllUnity. AllUnity is so for 1 month now, an e-money institute in Germany regulated under BaFin. I'm the CTO there, and we're issuing a euro-denominated stablecoin.
That was comprehensive. So quick and shorter intro about myself. Sebastian Becker. I live here in Munich in Theresienstraße, so I'm a neighbor of you guys at TU München here. Basically, I'm coming from the media industry. I'm a political scientist, definitely not a techie. And I fell into the rabbit hole in 2017 after first touch points in 2012. And since a year and a half, I'm the managing director of the Blockchain Bundesverband e.V., called Bundesblock, the leading German blockchain association. And let's say after ups and downs, not only in terms of Gartner hype cycles, but also in terms of awareness in Berlin and at corporate management levels about blockchain, we are now trying to surf the wave. And obviously stablecoins are one of the very good reasons why finally also politicians are becoming aware that there's something moving, something cooking, and we are obviously not really prepared. So let's not only talk about the tech today and your products and solutions, but also about the broader context. And maybe my first question would go to you. You are teaming up again now with Alex Höppner. You work together at Börse Stuttgart as well. So Alex is your CEO, and you both wanted to build a blockchain-based bank, let's say until a year and a half ago. Is the focus or the narrow focus on stablecoins now, let's say, a tactical iteration, or do you plan to build it out into a bank in the future, or what led you to this focus that you have now?
Yeah, so maybe to explain a little bit what we back in the days planned. So we actually wanted to build a bank that's completely built on blockchains, which in the end means so that all the deposits that are held with the bank are tokenized. So why I still believe that it's a good idea is simply because I think money is something which, like if it's tokenized, and especially when you also start tokenizing the assets, for example, also securities, crypto assets, and such stuff. That so if you have the money rails on the same technology platform as the assets, I think that's helpful, and that also helps to leverage all the benefits from blockchain as a technology. Because if like money and assets are living on different technologies, we have pretty much what we already have today in the world. So we have different systems. They need to get settled. There's different speeds. So therefore, I still believe that's a good case. But when it comes to tokenized money, I think we see different developments. So we, of course, also are talking about CBDC, for example. So there's the digital euro for the retailer. There's the wholesale CBDC also currently being built. There's tokenized deposits, and there's stablecoins. And from my perspective, is it really favorable to have all these forms of digital money in the future on chain? I also pretty much believe that all these different forms of money will coexist. So because they serve different use cases. For example, bank money is more like a store of value, so you earn interest on it. Stablecoins are more a payment product because you usually are not allowed to pay interest on it. So therefore, people kind of receive it and then they try to spend it again because it in the end doesn't produce value at rest. And of course, also state money will also remain in the future. So therefore, yeah, these forms of money will exist in parallel. And that's now also closing the link to your question. So I really believe that stablecoins at the moment are kind of the form of digital money that has the highest rate in development, so that it gets a lot of traction. So we already see with US dollar stablecoins, I think they have a pretty good product market fit in the crypto world. And the more stablecoins are now becoming a piece of infrastructure for also use cases outside of the crypto world, I really believe that also other currencies, for example, the euro, will become more important, and that's why we're building Allunity.
Thanks a lot. Yeah, let's stay for a second with the money stack. From an industry association's perspective, what we are trying to tell politicians and managers is you don't need to decide today if stablecoins are great or if CBDCs should be, let's say, the driving force. But we as a society in Europe, we need to be ready to have the best tech modules available. And then, there are different, of course, governance regimes that will decide about will we get a digital euro in the end. So that's up to politicians or public vote. But finally, we need to get our shit together and prepare the technology that can either make us sovereign again in Europe, or at least it will allow startups and established companies to build the tech and the products for tomorrow. So with that kind of argumentation, which is tech neutral as it should be in most cases, of course, we still want to promote not only our members, but also the Lighthouse products and solutions that we have out there. Let's start with stablecoins. Of course, what we see and what is most interesting in the space from a strategic aspect, in the normal fiat currency world, we have a dollar domination globally of around 63, 64%. In the stablecoin area, we are still at 99.8 or 7%. I hope that's about to change. Do you think that you can manage, not as Allunity alone, but also with the other peers that are also launching non-dollar-backed stablecoins? Do you think this will change rather quickly or very slowly? And is it possible to turn that around at all?
Yeah, that's a very good question. I think it's important first to get back in our heads again where US dollar stablecoins came from, because I don't know how it is for most of you here in the audience, but I really remember when I first time used the US dollar stablecoin, and it was when you were on different exchanges and you want to move funds from one to the other exchange. That was by far the fastest way of doing it. Yeah, so because having like a wire transfer out and then sending money to another exchange usually takes time, and also especially when the exchanges are overseas, it's pretty much the only way to move funds to those exchanges. And over time, US dollar denominated stablecoins really developed a really impressive product market fit, especially in the crypto space, because and I usually talk about like two different time horizons, and for me the first time horizon is the one we're currently in, and it's about stablecoins mostly used in the crypto world as a kind of like a reserve currency in fast markets. So for example, when there's like the next crash coming, many people cash out into stablecoins and wait for like a better opportunity to invest. But also they're used as a remittance instrument, for example, like I mentioned, moving funds between different exchanges. They also start being used as a treasury instrument, for example, in Argentina, Turkey, in countries where people have an unstable governmental currency, so that they use it over there. And I think these use cases, especially the later ones that I mentioned now, are kind of preparing the way into the second time horizon, which from my impression now also starts with companies, for example, like Stripe, investing massively into the stablecoin space. So they bought like a technology provider company, Bridge XYZ, that's enabled them in the end to start settling into the stablecoin world. But now they're also building their own layer 1 blockchain, specifically optimized for stablecoin use cases. And I really believe the more we're going to see stablecoins being used as a technical infrastructure for also, let's say, normie applications, yeah, so for people outside of the crypto world, the more we will see like an increasing relevance for all the other currencies next to the dollar. So because, for example, when people start using stablecoins as a technology piece for whatever, also doing payments, for spending money, for investing, for settling against crypto assets, but also in the future tokenized securities and such stuff, then the people want to do this in the currency where they receive their salary from, and which is kind of the leading currency in their jurisdiction. And I think euro as the second largest reserve currency and as a massive market globally, I think is the next currency that really goes strong in the stablecoin space.
Let's continue a little bit with the history of stablecoins to better understand where we are today. If we look at the leading stablecoins, of course, there are many in the meantime, but let's talk about Tether and maybe also Circle for a moment. So I think in Circle's case, it's quite clear with Jeremy Allaire, who is a serial founder. I think he started Cold Fusion, so I know him from the media industry. And on the other hand, we have a few kind of Italian anarcho-libertarians that live in Switzerland and run Tether. So it's not so easy to say, well, this is a US-dominated space. Nominally, if we look at the dollar, it is. But if we look at the guys behind it and the driving forces, it's 50 shades of gray, I would say. But maybe, and I'm sure you all know the stablecoin market at least a little bit, but let's talk about the reasons why this is a dollar-dominated market. When Mika was started to be discussed, Facebook had announced Libra, the stablecoin project, and the whole Mika regulation is basically an anti-Libra document. At least that was the starting point. And also as an echo of the financial crisis, interest rates for stablecoins in Europe are not allowed. In the meantime, I think in the Genius Act it's also taken out. But maybe you could explain a little bit how the collaboration between Circle and Coinbase, for example, works, and why it is important to have those partnerships to drive things upwards. I'm coming from the media industry, and for a pay TV satellite company like Premiere or DirecTV in the US, it's normal that you calculate with $500 to $600 customer acquisition cost. And that's true for, let's say, many products and industries. So against this backdrop, maybe you can explain a little bit how you interpret and how you study the connection between Circle and Coinbase as an example.
Well, I'm definitely not an expert in the company structure of Circle, so there's eventually other people here at the event who could tell more about it. But I think also worth to mention that Circle didn't start as a company kind of like, so we are now building a stablecoin and we get some funding and then we get things started. So they've been so at least from my knowledge, they've been a fintech company from London in the beginning, and I think they had some sort of remittance application that then transitioned into building the stablecoin, which obviously was a good choice back then. But yeah, so as I mentioned, so especially for the past years, stablecoins have been only used in the crypto space. So therefore, the importance of being listed at exchanges is kind of an entry point. And also we at Unity say for ourselves in the end, so we're in time horizon 1 and we're waiting for time horizon 2, so where kind of stablecoins are more used outside of the crypto world, but in the end you need to start in today's world, and that also means for us to get listings at different exchanges to become available for various people, and then kind of once you build some assets under management, you can start rolling also using the stablecoin for other use cases. But yeah, so I think in the beginning, the partnership with Coinbase has been, of course, super important also for the development of Circle, because Coinbase is one of the largest exchanges globally, and also one of the exchanges that try to be also on the, let's say, doing things with a wide west, being a listed company, but also trying to be regulated in multiple jurisdictions and trying to really fulfill the laws everywhere. I think that's a good choice for Circle as well to work with such an exchange and not start with the most unregulated ones.
Okay, adding some figures here. So I think Coinbase might have been 1 or 2 quarters ago that do $1.6 billion of earnings, and about 900 million of this figure is coming from Circle. So you see the amount of money flowing back and forth, partially kickbacks from interest rates, which are not coined as interest rates, but partially also marketing budgets that flow into this. And maybe let's build a bridge to what you guys are doing at Unity, because of course you will do certainly exchange deals, and while listings is part of the business model, then the collaboration, how can you make sure that the Euro stablecoin is used? But which other strategies do you have for your go-to-market? You really want to also focus on the payment side of things, also for industry partners. So what do you have in mind?
So as we got the license a month ago, so we're obviously in the very beginning. So that's definitely worth to say. We in the meanwhile have a TVL of about 20 million. I think that's for the short amount of time. That's quite good. But of course, we're definitely still working on getting better into the market. So yeah, the exchange listings and becoming trading pair for different trading pairs. Is one of the strategies that we currently follow, and next to it we're talking to a lot of industry players, so also the SAPs in the world, so who are now also and kind of in the second time horizon now realizing stablecoins can become a pretty interesting advancement in technology. And so therefore we try to get a share in that as well. And what helps for us is that in the end, with I think many companies are leaving Germany as a location. Also, I think to some extent also due to BaFin and due to the fact that other countries are a little bit more welcoming to crypto companies than Germany. But still, we see it as an advantage to sit here, and also our main mother company, DWS, so the asset manager of Deutsche Bank, also sits here. And those people are also super helpful, opening doors for us and really talking to the large corporations and giving like an extra factor of trust. So when talking to them, and this is where we hope that we can make a difference also in comparison to the EuroC from Circle, because so we hear from the market very often that Circle in the end is an US company, and the stability when dealing with the US is lacking a little bit over the past months. So people really believe that having a setup which is built in Europe and then in a kind of AAA jurisdiction like Germany. So that gives the extra trust, and that's what we hope that it's going to help us with the business development.
Now we're sitting at this table here at the blockchain conference of the TUM Blockchain Club, and of course, if we think of Technical University of Munich, there's also Unternehmertum, a big pool of corporates. Wouldn't it be easy, and maybe the European way, to convince all those treasuries to, invest in your stablecoin and become part of the pool? Or how can we imagine those early talks? And do you think that corporate treasuries will be also one of your main partners?
Well, so I'm not doing the business development on our side. I'm the CTO, so maybe going back to the use cases of stablecoins, I always talk about 4 use cases. So it's treasury, so like you said, it's remittance, it's payments, and it's settlement. So buying assets, crypto assets or securities. And I think each of these use cases are in different kind of levels of the hype cycle. And also when it comes to market development, like understanding the market infrastructure and so on. And so I think, so when people are thinking about stablecoins, the most prominent use case is the remittance use case. So where people say like, yeah, stablecoins make a huge difference sending money around the globe. It's cheaper, faster, more transparent and whatnot. But so I personally believe that remittance is going to become the second let's say the second wave of adoption for stablecoins, because what we need to achieve first is having a lot of integrations into different products. So, for example, into fintech products, into treasury products, into also kind of abilities to earn yield also with stablecoins, to invest, because for us as an issuer, it's not helpful when people are using our stablecoin for remittance, because this in the end would mean you on-ramp, you send the token, and then you off-ramp again. So for our business model of keeping a treasury, that's definitely not helpful for us. But I also don't believe that it's helpful for the customer, because you have kind of the on-ramp and the off-ramp. You eventually pay twice for it, and you in the end have the copper rails on each end. So with let's say the traditional banking system still that can settle also more than a day if you're unlucky. So in the end we won't win, and therefore I believe we first need to create this infrastructure where you in the end can use stablecoins also in these different use cases, and then the remittance use case is coming after, but it would then be built on top of an infrastructure where the stablecoin stays in circulation, and where you send it, then somebody receives it, send it to the next partner, and that's then also where things really get started to become interesting for us as an issuer.
Before we switch to tech and talent, and I will try to do my best to ask you a nice tech question, let's get back and talk about the strategic landscape globally. Now you made the right decision with AllUnity to go after the stablecoin use case. What does it do with a company if you have all those international little things going on, like Donald Trump coming to office, forbidding CBDCs in the US, announcing that they only bet on private stablecoin money, the wars going on everywhere? Is it stressful for you, or are you saying, well, we don't like those guys, but we surf the wave if they do decisions that are in favor of us? Or tell us a little bit about how you feel as a startup.
Well, first of all, I must say I feel a bit frustrated when I look into what's going on in the world at the moment. So, like the whole world shifting right in the right direction, not in the right direction, but so it's it's a little bit frustrating. But when it comes to the, let's say, lottery that Trump is doing, kind of when taking decisions, it definitely helps us. So in the end, he pushed stablecoins really, really on top of the agenda for the US. And now, after kind of like MiCA being in place and stablecoin regulation in place for a year already, I think the politicians have been pretty kind of like also didn't recognize much that there's something like stablecoins and what the potential is, and also in contrast to like the digital euro project, which very likely from my perspective is going to become a Rohrkrepierer. I don't know the English word for that, but I'm pretty sure it's not going to work out as expected. And yeah, so now the US really go strong into the stablecoin space, and we also see like movement on the politician side that they now recognize, okay, so stablecoins, yeah, we already have the stablecoin regulation, and we can actually build something kind of like in Europe, so where we've actually been first. So when finding regulation, and also in conversations that we have with Ministry of Finance and with BaFin, so the people really start to wake up now. Okay, hey, actually we can really be in the pole position here, but we also need to hurry up now and invest. And so therefore, I think so. I would have appreciated if Trump wouldn't have won the election. I think we still would have made All Unity to a successful product. But yeah, so now he's there, and now we need to deal with it.
Let's talk a little bit about how to influence politicians, especially here in Germany. We know that unfortunately the Ampelkoalition wasn't really a driving force for innovation as they thought they would be themselves, I think. You've been part personally, even before your stint with All Unity, now part of the Digital Finance Forum and the ministry. Was this forum really helpful? Can you explain a little bit to the audience here how it works? Because even though I'm, of course, part of Bundesblock, we all know that we as an industry and as a community, we need to also mature in our communications, and we need to better understand how to exert influence. But if you're inside of those advising rounds of ministries, was it helpful, or couldn't you, let's say, realize something because the coalition was in such a bad state rather soon?
Well, I think the Digital Finance Forum of the previous government was a pretty helpful thing. But we also, as the participants, we could recognize that, like in the first half of the period, it was super nice. We were defining like a finance strategy, and we were able to put also some blockchain topics on it, so to make it more important. But then we also started to realize that the coalition didn't work out, and they had these internal conflicts all the time, and so we even recognized that the invitations for meetings in the Ministry of Finance kind of became so were reduced, and in the end, then it's kind of it stopped, and I think that was sad, because I think for the blockchain community also in Germany, and for the industry, it was, I think, a very lucky situation that in the previous government we had the liberals in the Ministry of Finance. So that, for example, so when it comes to crypto taxation and so on, so they really changed some things for the better, or at least kept them like they were before. So that it would have looked different if the Ministry of Finance would have had the red color like it had before. So therefore, that was good. Yeah, but still, so we need to see how things continue. I think the current government now is shifting back again kind of to how it was before. So also like taxation, there's going to be changes again, and there's eventually also not such a big understanding. So what you can do with blockchain technology, and therefore also my hope is, especially, and so we talked a couple of times over the past years, and one of my narratives over the past 3 years also became that I try to explain politicians when talking about crypto and blockchain that it's not only about like the big casino that the politicians see, because we also all know what's going on in the crypto space. Like, people try to buy cryptocurrencies, they try to win, they start their ICOs of their projects and try to become rich fast, and like a lot of shady people in the industry. I think that didn't help to increase the reputation, and therefore it was never an important technology for the German government. But I think the more we're going to see use cases that really affect also the real world. Yeah, so for example, stablecoins or tokenized assets, real world assets, and all these things. I think that's. So I tried to hold up that narrative all the time, also in the past. But now seeing these developments also gaining traction, I think that can definitely become helpful also for future conversations with government bodies.
Let me tell you one of the top headlines that we have at Bundesblock. We think we saw a lot of innovation in the financial industries. We now have the regulated space and a lot of financial tooling. But of course, we are an industrial nation. So would you agree that the financial tooling or toolbox that we have needs to enter into the different industries through the treasuries, the corporate treasuries? Or do you think there's another way around? Because, you remember as well, 7-8 years ago, we discussed autonomous vehicles and smart mobility, and everything is basically consolidated data-wise and settled on blockchain, which didn't happen for various reasons. So do you think that's the German play? Because most likely, even though All Unity will of course become a big success, Germany will not be the world's leading financial market tomorrow.
Well, that's a. What was the question? Yeah, I think. Yes, it's difficult to answer because I think also blockchain is not only about financial, right? Blockchain in the end is a technical infrastructure that you can use for also a lot of things that are not financial or about financial technology. I still believe that the kind of it's the most useful when using it in financial technology. But I think the major shift that also the big corporates need to understand is that we're now dealing here about a technology which is usually not owned by someone. So because I think many also financial use cases are still built around kind of building an own silo and then kind of like marketing the data and kind of really protecting your own silo and making sure that nobody can integrate. I think the big revolution, so that at least I always found very intriguing when also coming into the blockchain space, is that you have this open platform that where you actually can share the infrastructure. So I'm always explaining like why does every bank need to run their own core banking system? You can use that one global core banking system for managing your accounts and then build financial applications on top. And I think this is also then going to come into the corporate world, that I understand like okay. The Web3 and building business models on top of the Web3 just works differently in terms of the architecture, how you build stuff, so I think the corporations will learn that.
And now the tech question. We are more and more entering this multi-blockchain ecosystem. So many industrial projects will live on different chains because of different use cases that come together. Can you tell a little bit how you run your tokens, and do you have a multi-chain strategy for it, or how does it work for you?
Yeah, so we're at the moment on Ethereum blockchain. We're going live on different layer 2s also rather soon. In the end, we need to move our token where our users are using them. So which in the end means as many different blockchain platforms as possible. Also, I was talking previously about the new chains that are now created, like Arc, Tempo, and whatnot, the stablecoin optimized ones. So I personally believe it's a very interesting direction we're heading there right now. But I also still believe that we really need to be aware that we don't lose kind of the advantage of blockchain, because if every corporate and every fintech, every stablecoin issuer, every crypto exchange is running on their own blockchain, we didn't win. Yeah, so because in the end, then you can also use a relational database where you have like 100% of the governance and move it in your data center. And so it's in the end kind of that's not why blockchain was invented. So blockchain was invented kind of to have at least the best case would eventually be to have one, but I think we all accepted that there's also blockchains with different advantages, technical advantages, so that they're better used for the one or for the other use case. So it's heterogeneous, which is also, I think, good. So I think we are winning when there's like a couple of public blockchains that are mostly used for everything. And that this infrastructure is shared. I still believe that there's also room and improvement for public blockchains, because so I remember when, especially let's say the early conversations about the digital euro were started. I was part of conversations also with Bundesbank management, and they gave me like a very interesting perspective on how they see Ethereum, because they said like, yeah, it's actually a great idea to say ECB is an issuer of state money, and they can mint it on paper, they can mint it whatever in the banking system, they can mint it on Ethereum blockchain and some other private blockchain. So and then kind of they do the swap between the two technologies. I think that's an interesting approach. But he said, or that they said, Ethereum does not work for them because the governance is not assured. And then I started thinking about it. Okay, what does it actually mean? Yeah, because whatever in 20 years, in 60 years, so if eventually Ethereum isn't interesting anymore because whatever Solana or other ecosystems really gained the most traction, so then there's an eventual risk that there's a high concentration of ownership and stakeholdership on the chain, and then it's not really assured kind of that it kind of like can continue in like the way that for example in ECB would expect it. So that and then also need to make sure that not like a third party can whatever increase the amount of funds on their wallet. So yeah, so therefore I think we still need to get like a public blockchain that has like a high ownership. So I think now let's think big here. I think we actually would need to have like a blockchain where everyone, like every citizen, is an owner. So that's like everyone is a stakeholder. So where not like A16Z is the main investor and has the most stakeholdership, or some other VCs, or some like a limited amount of people. So it needs to be really broadly distributed, and then of course also optimized for some compliance topics. To be really also able to fulfill so the laws and regulations, but also with privacy also in there, because I think for us being in the crypto space for a while, I think we pretty much accepted that there's a public address and everyone can watch that address, and we all developed kind of our mechanisms how we can kind of stay as private as possible. But privacy built in, that's really not the case for most of the applications. I think so if we really want also like the various finance blockchain use cases being moved into broad public, we also need to find a reliable way for privacy and compliance at the same time.
So we had a very interactive session so far, and the time is already up. Before we take 2 or 3 questions, last question to you, Peter, maybe you have a short answer. If you now look at hiring talent, tech talent, which types of people are you or will you be in need for, and which kind of research topics would you love students to do?
My answers are never short. No, joke. So I think we're developing pretty good at the moment on the HR side, on the team side. But yeah, so definitely looking into also because in the beginning we really kept like a small team with very senior people, but we're also going to accept interns and also people who want to write their master thesis and so on also in the future.
Okay, you know Peter's address, and there was at least 1 question, 2 questions, 4 questions, 5 questions. Okay, we have 10 seconds per question, I think. Let me join you.
Hi, thanks for the presentation. How do you think about yield, both for the reserves and for the stablecoin itself?
Sure. It's only for the recording. Please ask a question.
How do you think, or how do you want to achieve the privacy part? So since you want to support many different chains, and privacy can probably only achieve with a privacy chain, so then you will be bound to that one. What do you think about that?
If you could pass the mic, whoever else has a question.
Why should I use AllUnity Euro versus Euro C, for example?
Okay, Peter.
I think there was one more. Yeah.
Thank you for the presentation, first of all. The digital euro and also the wholesale CBDC and also the digital euro for retail is probably not going to be really blockchain based as far as I understood it from the central bank. Do you think building AllUnity properly blockchain based has some technical advantages, and which would those be?
So very short questions, easy to answer. Here you go, Peter.
So maybe first, why should I use AllUnity Euro? So like I explained in the presentation already, so we're it's German tech, and it's we're built as a company from Europe, and there's definitely companies who appreciate that in comparison working with other companies. There was the yield question. So yield can be seen on both sides. On the one in our treasury, and in the end we're bound to the regulation. So we have to keep 30% on bank accounts, and then we're going to rely on the yield from the banks, and 70% in high quality liquid assets. So in the end we can invest into governmental bonds and such stuff. So that's where our yield comes from. In the end, we are not allowed to pay yield to the token holders, but we're currently looking into mechanisms how we can also, like all other stablecoins, also work with kickback mechanisms and also getting yield pools in the DeFi space, so that also the holders of our token can earn yield on it. Exactly, the privacy question. Yeah, so in the end, privacy can only be achieved on each of the blockchains. For example, Solana with the token extensions. So that's a pretty interesting platform from my perspective. Also, like a really a public layer one with a lot of traction. So that has these features built in, and that's definitely something we're looking into. Especially also because in the end, the mechanisms still can keep the compliance, because you can still see where the funds were moved, but you don't see the amounts kind of that have been moved. And I think that's a pretty nice, let's say, level of privacy to stay compliant, but at the same time also preserve privacy. And then exactly the question regarding digital euro and CBDC. Yeah, so I think like for the retail CBDC, for the digital euro, it's definitely not blockchain based. So there's a proprietary platform being developed. So I don't think that it's a good idea. I must honestly say. And also the way it's currently developed, so that the banks are forced to integrate it into their applications, but in the end they don't have a business model for the digital euro from my perspective, because in the end the money will be on the balance sheet of ECB. So in the end the banks can't lend it out anymore. So they in the end they lose money on it. They have the integration costs, which were, I think, estimated to be 2 billion plus for the whole industry. So therefore, and they don't get money from the ECB for it. So therefore, I'm pretty sure they will put the button next to the imprint in their application. So because in the otherwise, I think it doesn't make sense for them. There's no business model for them. And regarding the wholesale CBDC, I think it's so there are currently 3 solutions being tested, and it's in the end for the wholesale CBDC it will be blockchain based, and I think also that the wholesale CBDC will be a big success. So also the way they're currently building it.
So great. Thanks a lot, Peter, for telling the AllUnity story and sharing some insights from your days in the industry. Please keep in mind we might lose some battles if it comes to tech decisions, etc., but we have not lost the war. The understanding of blockchain technology is only still at the beginning if we come to decision makers, and I guess all of you will now leave the room and help us and help yourselves with spreading the word and building. And then next year we will see you around with a few billion in your TVL and treasury, and then we'll continue the discussion. And you're still around for a bit, or you are leaving soon?
I'm still around, yeah.
Okay, thanks guys.